All right. Again, once again, everybody who's just joining me, this is something that I personally decided to try to do at least once a week or every other week or whenever I can, just to review my portfolio, because there's a lot of people who follow a lot of the trades that I actually take and I actually get into. So I like to try to keep people updated with what I've done with the trade personally. Trades that I've closed. Sometimes I've gotten in a trade, gotten in and out of trade so fast that I hardly have a chance to mention it. So I want to try to get in the habit of at least reviewing my entire portfolio at least once or twice within a 2-week time frame, so that if you have been following my trades, you can see what I did, what I didn't do, what I'm still in, what I'm out of, and what how many sneak plays I did and you didn't know about, because I have done some. I have done some that bit me in the butt because I was just trying to be quick and going against my grain, and sometimes that'll come back to haunt you. So, all right, let me all right, cool. I'm glad I got Dan here because Dan can have my back. If it's anybody else who's having problems trying to get in, Dan will lead you around. But I'm gonna go ahead and get started. First, I want to start off with showing you guys a particular trade that I mentioned back in September. And it's the reason why I do this, because I tell you, when you find a trend and you follow that trend, the trend will always be your friend. So this is a trade that I mentioned back in September. And I told you guys I like to trade options on long term. If those who have followed this trade when I first mentioned it back in September, if you have stayed in this trade, got a long-term option and bought at least a 100 strike call, it was a little cheaper back then. You would have made a substantial amount of money if you'd have held it all the way up until January, like I had originally put out there. It's a January expiration when it doesn't expire until next week. Here it is. It was, drum roll please, it was EOG, which was it's just like a gas related stock. It also has it has a mixture. It deals with gas, oil, and natural gas. This stock always has its way of trending higher if oil or natural gas moves just a little bit. So whenever one moves a little bit, this one has a tendency to continue to trend. When I first mentioned this trade, I saw this TTM squeeze forming here. Saw how it went from blue to red and then yellow to red. It was trying to get out of this range, and I drew Fibonacci on it. What I realized is that on the Fibonacci retracement tool, it did not go anywhere past the 50% retracement. Kind of held this level for quite some time. So when I saw this and I saw the TTM squeeze, I said, okay, this thing is ready to go higher. It's been trading in this range for quite some time now. Ready to go higher. It's about time to take this trade. So I mentioned to folks, and at that time, I think oil was starting to move higher as well. So this was back in September. I put it out to the group. EOG January 100 strike call options definitely look good. I like to play. When I first saw it, it was at 96.17. And I suggested the January strike because I knew that it was going to take time for it to play out in order for it to reach $100 and beyond. Okay, let's fast forward to the day so you guys see what that looks like. All right, let's fast forward to the day. Remember, trends are your friend when you notice them. All right. Voila, where are we at now? We broke out of this range. This is the range that I saw there when I first saw it. It was somewhere around this range right here. This trading range right here when I first saw it. As a matter of fact, I think I may have seen it before that. Yeah, it was right. It was close to $100 when I first saw it. It was trading in this range. Lo and behold, it broke out of that range. Or back. Once it broke out of that range, it did not come back below the 23.6% retracement. It stayed between the 23.6 and the 0. That means it's trying to get back up to this high. So if I would have got this trade and I wanted to stay in for a long-term option, I probably would have stayed in as long as we didn't drop below this 23.6% retracement, which would have brought me back to $96. We didn't do that. So at this point, now I would have stayed in this trade versed off of what I see with the moving averages lines. And as you can see, this big purple one is my 50%. My 50 EMA. 50 EMA to me is like gold. If I get a bounce off that 50 EMA, I know it's going to continue to go higher. So what happened? Entered back in September, jumped up here, pulled back to the 50 EMA, which became a nice support level and continued to march higher. And now we're at 115. So when I first saw this trade, you guys, it was at $96. Remember what I told you. When you find a trend or a range, something's about to pop out of this range. See this range right here. You find that trend, you think you're about to pop out of that range, Fibonacci retracement and these moving averages line can be your best friend for a nice big move. So that was pretty much almost a $16 move within a couple of months. You would have made a nice substantial amount of money with 2, 3, 4 of these contracts. You could have made thousands of dollars. All right, now let's go back to let's look at some of my current trades that I'm in. And then I'm going to also show how I draw a Fibonacci retracement, because I had somebody asking me about how do you draw Fibonacci retracement if for some reason the stock is trending higher and is at its highest high. I'm going to show you what I would do in that situation. All right, let's review my portfolio. I was in a Bed Bath & Beyond put option. I sold it, and the reason being I sold it because retail seemed to be in this funk this month. It seemed like it doesn't really want to go down, but that's not the main reason I sold it. I sold it because I saw something else that I wanted to get into. So when I first got into this, I was only in it for like 2 days. Bought it for $267 on January 8th, sold it on January 10th for $268. So I made about a penny off of that. Whoop-de-doo. So I got out of that position. Other positions that I just entered this one, HST, which is some hotel stock that I saw. And the reason why I entered this one, actually I bought 2 contracts on it too, and it doesn't expire until April. So I got plenty of time for this to play out. I was watching CNBC today, yesterday. Watching CNBC yesterday, and I saw something that I liked. I saw extreme volume or heavy volume on some call options for February for this particular pick. Now the call options that I saw for February, it shows some unusual volume. And normally when I see unusual volume, I normally try to pay attention to what's going on. I mean, something's going on. Somebody's expecting a big move out of this particular stock. When I actually saw the actual pick on CNBC, how they were saying that there was some unusual volume showing, I see what the analysts are saying, then I go and do my own research. So when I actually looked at the volume for HST, this is what I saw. Actually, it was a little bit higher than this yesterday. If you look at the 20 strike, if this is a 20 strike on HST, this is a 20 strike. Volume started to pick up. 2,962 contracts being traded. That was for that, and that's just for February. March, it showed a little bit of action. You got action around the 20 and the 21 strike. This is more than likely probably type of vertical call spread going on. So they're expecting a big move beyond $20, which is what kind of interests me. So that's a trade that I got into today. I bought the April contract, of course, and guys know I like to give myself plenty of time. So I just bought an April contract, and I think I got the 19 strike. I may have bought the 19 strike. I like to go into money. But 19 strike or the 20 strike. So I got that one today. Let's see. I bought the 19 strike call for it, and I'll probably hold this one for at least about a month or two. But that's one of my newest positions. I sold my PayPal call on the 5th, several days ago. I purchased it for $510, sold it for $605, so that was a nice, decent profit I made off of that one. Exited that position. Let's see. Marathon Oil, this is a new one I just picked up on today. And as you guys, if you guys wasn't paying attention, if you were paying attention, you would see that oil was really starting to break out to the upside. I went in and took some action in this particular position, so I went and bought Marathon Oil. I bought a 18 strike contract. 18 strike April expiration contract for Marathon Oil. Bought that on today for $154, and I'll probably stay in this trade for probably a couple weeks or a couple months. All depends on what I see. And if we go and look at the chart for oil in general, then I look at Marathon Oil. But if we look at the chart for oil in general, and what I normally track is the NYMEX crude oil. So if you look at NYMEX crude oil, look at NYMEX crude oil, this is what the chart looks like. We're already above 62.57. And if we expand this out and look at let me see if I can expand this out here. Bear with me, folks. I got something in my way over here. Okay, here we go. If we expand this out, you can see if we look at the weekly chart, I kind of got the Fibonacci extension on here. We already broke above the 100 line. We're crescent back above. We already broke above the 100 moving day average. We're cresting back above where price came from back in 2015. Price made it all the way up to this point. We trace back down to 2605, and now we're back up here, 62.75. Let me get rid of this drawing. So as you can see, crude oil is like it's ready to move higher. Now, one thing we had to pay close attention to when following this crude oil, that if you look at the monthly chart show it starting to hit some resistance. The monthly chart shows it's still trading. I don't know why this extension tool keeps drawing on its own. I'm about to change something in a minute. Move that again. Let's switch this back over. This for now. All right, if you see, look right here where the 100-day moving average line is on the monthly chart. We are approaching some resistance, and it looks like it's around about $65. So I don't know what's going to happen once we get to about $65. So I'm playing my Marathon Oil play real close. And I got several months, so I might just wait. Even if we get a pullback in here to around about $55, close to 57, I might wait and hold it since it does not expire until April. My Marathon Oil, I'll probably hold it until it doesn't expire to April, and I might wait until we can break above the 62.57 before I decide to sell it. It's only one contract, so I'm not too worried about it. So that's my Marathon Oil. My reasons for being in that one, and I sold today. I also sold my XLF. Hopefully you guys can see it. I got stuff in the way up here. I sold my XLF today. Didn't make much out of it, but I wanted to get into enough position, and I'm gonna show you the position that I got into today. I had 3 contracts at 183, sold 3 contracts for 212, so I still made a little profit off of that. I just wanted to show you guys. Let's see what else we have here. All right, this one is a new contract. I just bought I bought this one again yesterday. I was in U.S. Steel a couple weeks ago. I made a nice profit out of it, and I'm back in it again. This one for $375 is now valued at $380. I'll probably hold this one. Probably doesn't expire until March. I may hold this one for about a month. We'll see how the trend goes. Okay, got that one. Showed you that one. Let's see. Starbucks. Starbucks. I just bought this one on yesterday. Bought it for $3.86. It's now trading at $3.50, so it did go down in price value right now. But it does not expire until April. And if you look at the chart, this is one I definitely need to show you. And I'm also going to show you Starbucks. Look at the chart on Starbucks. And as soon as I finish this presentation as far as my positions, I'm going to do some chart analysis also. All right, this is on a monthly chart. I'm going to break this back up to down to all three, monthly, weekly, and daily. All right, if you look at the daily chart of Starbucks, this is what nice little base that was formed down here, up, down base. Looks like it's ready to break back up to the upside. Looks like we're ready to break above 59.57. I'll probably ride this up and down wave probably for a few weeks, maybe even a month or two. And my goal is $60. I would like to get back up here to the $60 level. And right now we're trading around, trading around 59 now. I want to get back to around $61 before I decide if I'm going to exit this trade or not. I think it does have the potential to get back up here to 64. That's what I believe. This is the daily looks like. If you look at the weekly, so let's take a look at the weekly. And the weekly even looks even more promising. So if we look at that weekly chart, it looks even more promising. You see where price came from. Price was up at 64.40 and 64.87, and that was back in June 2017, and retraced big time. Traced all the way back down to about the 78.6% retracement before it started to march back higher. Now we're right at around 60. If we get to 61, then that may be a good area of resistance. As you can see, it traded in a range for a little while here. If we break above 61, around $64, I can see some resistance for sure, because you had the strong resistance up here. So we have to see if we can break past 61. That'd be the first goal. Second goal was to get close to 64. So I say around about 63. I don't like to stay all the way up until where it meets that resistance point again. I like to get out probably $1 less from where that resistance point is. All right, so I want to ask them the question. I'm going to show you fib in 1 second. Give me 1 second. I want to go through all these, all my positions that I'm in. And I'm going to show you where I draw fib, why I draw fib, and the different time frames that I draw it on. We can move to the shorter time frames. I'll show you that in 1 second. All right, now, so that was Starbucks. Oh, let me show you this is a beautiful chart right here. I'm telling you guys, if you're not looking at some of these industrials, I'm telling you, anything that's dealing with these industrial metals like steel, AKS, X, NUE, AA, FCX, these stocks should be ripping soon. And I'm gonna show you what I mean by that. And plus, not only that, you guys know that the government, their next I guess area of attack would be infrastructure. So they're going to be probably attacking the infrastructure bill sometime this year, and that should go well for some of these industrials as well as the tax plan. But if you look at the monthly, guys, this monthly chart, it just looks so beautiful because it has so far to go. It's a lot that can happen in this year. I'm gonna stretch this out so you can see. You see where we came from back in 2008, 2009. It's just been in the gutter for a long time. I think it's ready to break out of this gutter. The monthly chart. We tested this level before. Could not stay above the 100-day moving average line on a monthly. Faltered. Came back, tested that level again. We made it above the 100-day moving average here, but we could not break this resistance level. And guess what? We're about to test this resistance level again. That resistance level for X is around 41 bucks. And right now the price is at 39.52. 1, 2, I would say the third time is a charm. That's just me. We'll see what happens. I think we have a chance to break through this 41 this time. So I'm loving these industrial metals. So I'll probably be holding my X position again, probably at least until I get a nice gain out of it. I'm gonna see what happens once we get around the $40 level, between 40 and 40.50. I'm gonna see what happens. I would love to stay in it and see it break this 41 barrier. That's my ultimate goal. So we'll see what happens with that one. And let's see. I already told you about Starbucks. There's one more. Oh yeah, the one that I entered today that I'm really excited about, which I think could probably do me well. Oh shoot, I gotta find it. I don't even know if you know what? I probably didn't even well, let me show you the chart of it. ATVI. Actually, I jumped into ATVI today. I think I posted it on our chat group. Man, ATVI, Activision. This thing, and this is one of the ones where I'm gonna redraw this Fibonacci so I can show you how. This is a monthly chart which pretty much shows all its history, and we are at the highest high. We are already reached the highest high. So highest high is up there around 69.33. So this thing could continue to go higher. So what I did was, instead of me starting a Fibonacci up here and going down here and not being able to see where it could go, because without any resistance above, you know what I'm saying, you pretty much have nothing to gauge it off of. That's why I like Fibonacci, because Fibonacci can draw these extensions that give you at least some type of target to gauge where price could probably be headed at next. All right, so what I did with this Fibonacci is, what you can do, I'm going to erase this and I'm going to show you what you can do. And you can do this on any time frame if you can find a high and a low point. I just measure from low points to high points. Remove this. So this is the highest point. If I was to start from up here, and let me put on the Fibonacci extension piece here. Fibonacci extension piece. This is the highest point now. It got up to $69.33 now. So if I was to go from, let's say, from this low down here up to the highest point, you can get the Fibonacci extension drawn. Only problem is that we're already pretty much at its peak. Okay? Yeah, at its peak. Now, there's a couple things you could do here. Let me get rid of this first. First of all, this level right here to me is a good level of resistance. This level right here, right before this candle peaks up here. So that'll be my first level of resistance would be here. So I could take and draw a fib from here. I'm sorry. Let me do that over. So I can find a low point down here. You can pick any one of these low points. This is a pullback here. This is a pullback here. This is a pullback here. So all these are low points. So let's pick this one. Up to these highs right here. Back down to this same one. All right. So now I got fib drawn. Now, but you can't even see the extensions, can you? You can't see the extensions. Now, if you want to be able to see the extensions, once this price starts to move and it starts to go higher, you will be able to see the extensions eventually. But if you want to see them now, okay, no problem. I'll go from another high and another low. Let's go all the way back here. From this low up to, let's go about to this high before pullback. Let's see what we've got. Go back down to where we started at. Well, at least you can see. But this was an area of resistance right here. You can see when we made it up to there, bam, we fell, made it up there again, struggled a little bit, punched through it, fell back through it again, then it just went higher. Made it up to this resistance level. You can see we struggled here a little bit, then we went higher. This is the 161%. This is the 161% retracement, 161.8% retracement. The next level up here is the 400-something percent retracement, you guys. Now, if you still want to see your lines, there's several other things you can do. You can either draw, you can even readjust this fib here, or you can even go down to the hourly or the daily, and also draw a fib there in order to see the extensions further. Let's take it a little bit. Let's take it a little bit lower. Let's go from this low up to, let's go to this high. Where you got to pull back. Voila. Same difference, except for now you can actually see the 423%, 423.6% retracement, and you're actually touching it. All right. So that's another way that you can actually, you know, draw Fibonacci for prices that you have not seen yet. In other words, you got to the highest high, you can use the Fibonacci extension tool in order to get another level of resistance that you can just feed off of for an area that you would like to take profit or even look for a resistance area. You are using this. Yes, this is the Fibonacci extension tool. And if you use the Thinkorswim, it's easy to find. Using Thinkorswim, it's the same area that you actually get the regular Fibonacci retracement tool from the daily now. Up here at the top where it says drawings, click on that, go down to where it says drawing tools, or right here, this level right here. And these are all your different tools that you can use when you're trying to draw diagram. I mean, draw different tools and stuff that you can use in order to see the direction of stock. The one over here to your right here, this is the Fibonacci extension tool that I like to use. All right, and once again, this right here is on the daily charts. Let's draw a fib on this one. You can draw a fib on any chart that you like to use. And I'm gonna take it up here to this high where we got to pull back. And I'm going back down to here. Yep, that's a good one. And then if you do this, and then you want to, you can actually do it like this. But let's say if you wanted to get an extra level of resistance or support, I kind of like drew my own support line here, resistance line here. You see this little red line I drew? I drew that one earlier. So I wanted another guide. So I drew myself a nice little resistance line right above this area where price went up. Here, 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 and here, and failed. So that's a good area of resistance. I just drew another line there. You can always draw another line on your own if you like. Somebody asked me, do you always use extension instead of retracement? It's the same thing. It's still the Fibonacci retracement tool. It's still the same tool, except it has the extra layers on there. So it's still the Fibonacci retracement tool. You can use either or. Okay, you don't have to use the other one without the extensions if you don't want. But they're both still the same Fibonacci tool. This is just a Fibonacci tool with extensions. That's all it is. No difference. So let's say, all right, now I drew it on the daily. Now, if you go over here and you look at the monthly, you'll also see it also drawn in here if you set the charts up the way I set mine up. So you got an area to look forward to. So right now, the next area of resistance looks like it could be the $74 area or $74 level for ATVI. So I'm looking forward to that. So I'll probably stay in the stock probably at least a couple months or a couple weeks to see if I can make it up to at least 70 and then 74. And then beyond this 1% retracement, there's another level, which I can also use as a gauge. But these retracement levels are only as a gauge. Use it as a gauge. All right. Now, let's see. All right, so and this is the last one I'm actually in, you guys. And now, for those who who are not too familiar with options, and you say, well, how do I know what strike to buy, or how do I know if I need to buy a straight call or a vertical spread? Well, a lot of times it's up to you. And for new people, you know what I'm saying, it's probably in your best interest to really learn a lot about options for you to start to trade options. Options can be very rewarding, as you've seen, as in my other example that I gave you of EOG, which if you would have bought that long option like I decided to buy back in September all the way and held it up until January, you would have made a very, very substantial amount of money. All right, let's look at the option chains. Now, I picked up ATVI today. And one thing that I like to see on my option chain, I'm gonna look at the single options. I'm not gonna look at the option spread, because that'll just get you confused if you're new. One thing I liked when I looked up ATVI, I noticed how it was trending. I think I showed you already the chart how it was trending. It broke out of a range. I don't know if you guys picked that up on the charts that I showed you. ATVI broke out of a long-term range, this range right here, and I'm gonna show it to you on the weekly so you can see it a little bit better. It broke out of a range that it was in for a long time. When it broke out of that range today, I was in. I was automatically in. I said, I got to get into this position. It broke out of a range and it has no resistance above it. Who knows where it can go from here? So if you look at the weekly chart, look how it hovered around this level for a while. And then it broke above it a little bit, but then it started trading in this range right here, between $60 to $67. It was in this range for quite some time, at least from July of this year, all the way up until January. It was in that range. Oh, 6 months, trading in that range. We finally broke above that range, big old green candle. One thing I like to see when I see a breakout, I want to see one green candle first in the range, and then another one right next to it outside of the range. These are weekly candles. So you got one green week last week. We got another green week so far this week. It broke out of the range. That is a key sign of a possible breakout in the making over the long term. Okay. So when I say over the long term, I mean this is something that may continue to go on for a long term, not something that you can get in a day and expect a big move tomorrow. But over the long term, you can see this continue to break out on a weekly basis. The next level of resistance, I tell you, looks like $74. So this week, it may not do much more in this week, but next week, I can guarantee you'll probably see this thing continue to rise closer to that $74 mark. Nice breakout here. That's what you want to see in the trend. When trend start, you got all this up and down action, up and down action, up and down action, and it finally breaks above that barrier, that resistance barrier, which is right around here. Broke above the resistance barrier, and it broke out of that range. So I'm looking forward to staying into ATVI for quite some time. All right. I think that those are the only trades I'm actually in. I wanted to show you guys the way I use this Fibonacci tool, because the Fibonacci tool can be very, very helpful and useful. I even had some people actually used to try to use it when it was, I guess day trading. I don't do that because day trading stocks move so much. I think the way Dan and them does it is probably the best plan of action as far as using VWAP and things of that nature. But looking for breakouts, I'm telling you, when you can establish some good areas of resistance when the price seems to want to gather and consolidate, Fibonacci will probably be a very, very good tool to use looking for those consolidation areas and looking for the breakouts. Key things that I also use in addition to it is TTM squeeze. It can be your best friend. As you can see on this weekly TTM squeeze, how it just steadily. You could tell it was starting to accumulate as price started to gather in one area. The TTM dark bar started to trickle down, and when it was ready for a breakout, it went from dark blue back to light blue, and you got the two big candles that's breaking out right here. Look at the MACD. MACD is ready to cross over. It has not crossed over fully yet. So that's one thing that you got to keep in mind. Once this crossover, MACD contains this, the blue line crosses over this golden one here. Look for a nice breakout to the upside. So MACD is also important as well. Anybody want to look at a particular stock while we're reviewing this? There's a couple I want to show you guys that I did not get into. But I wanted to show you guys some other stocks that I saw that were trending. It was just so much stuff I was watching that was trending. And AMAT, yes, I got you. AMAT, I got you covered. There was so many that I saw that anytime I see something, I actually have a running watch list. And I wish I could show it to you on my computer, but it's actually on my Yahoo Finance app, which is on my phone. But anytime I see something I like, I add it to my running watch list. And the newest ones that I added this week were Marathon Oil, EA, Electronic Arts, ATVI, Host Hotels Resort, which is HST, which is one I picked up, Starbucks. I don't know if I showed you guys the chart on Starbucks, but I'm going to show you that real quick too, because I know I heard some people say, I don't want to get Starbucks just yet, but I did, and this is one of the reasons why. Starbucks, another one that has formed a nice big base, starting this little cup and handle formula. Cup and handle formula. Nice little base on this weekly. And it's ready to break out of this base. I'll give myself a couple weeks or a couple weeks in this position. And I'm looking to get up to at least the $61 level, which is my next area of resistance. Hopefully I can get back up to 64. If it goes back up to 64, I'm going to be paying attention to very, very closely. Reason being, this is a weekly chart. You see we hit 64.87 there. Look back here, and it's also going to be close to this resistance area here. So I would like to see Starbucks get back up to at least 61 and then hopefully 64. All right, now, another look at AMAT. Okay. ATVI also, oh, wait a minute. Did you ask me how did I find ATVI? Somebody just asked me that question. How did I find ATVI? All right, ATVI, okay. Actually, it's not something that I've been trading for a couple years now. So I got a long running watch list that I constantly look at on a regular basis. So that's part of the answer, because I've been watching, certain sectors and certain stocks within that sector for a few years now. ATVI and EA has been on my watch list for a while, and I always watch the trends. Another thing that drew my attention to ATVI, and I was wondering if it came up. No, it didn't come up on the scan, because I don't use a lot of scanners. I told you I don't use a lot of scanners to scan with stocks, because I find so many through word of mouth and by watching television shows like Kramer or CNBC. I hear certain things and pick up on certain things. Not to say I pick it because they say this might be a good pick, but I listen to what they're talking about, and then I go and do my own research. So ATVI and Electronic Arts, which is EA, was mentioned on CNBC this week. I forgot the name of the show. I want to say it was called, I think it was Options Actions or Fast Money. Fast Money show. It mentioned Electronic Arts and ATVI this week. And then when I put it into my my Yahoo Finance watch list, put it to my Yahoo Finance app, I saw some news on EA and ATVI that was very interesting. So then I went ahead and I actually drew out I looked at the charts. Once I looked at the charts and I saw the trends, they gave me confirmation that, okay, ATVI is probably going to be a winner. Okay. And then I looked at the option chain and I saw a lot of action within the volume inside of the option chain. So that's why I decided to get ATVI. Okay. Hopefully that helped out a lot. But I watch these shows every day, all day. I watch the CNBC shows. I watch Opening Bell, Closing Bell. I watch all of those shows because you can find out a lot about companies if you watch those shows. Sometimes the CEOs of those companies will be on those shows, and you can hear a lot of information that may cause you to watch a stock. Okay, so that's how I heard about that one, which made me want to jump into it this week. Caught my eye because I heard about it on CNBC. When I looked at the chart, I was beating myself up for not even noticing it already because it's been on watch list for a while. All right, ATAM. Sorry, AMAT. No problem. AMAT. When you start to actually get into this market, you gotta absorb yourself with any information you can about this market, which means watching TV shows, which means listening to news, which means Googling news. You know, once you consume yourself with it, you'll find out a lot about different companies just by paying attention. I found out today, Sam's Club, which is an extension, which is another part of Walmart's business, is closing a lot of stores. Heard about that one this afternoon. Okay, AMAT, this is what it looks like. There's a couple of things going on with AMAT and some of these semis that I am not a big fan of right now, and I'm going to show you why. Not saying they're not going to go higher. I think they will. But I just think about these semis over the past, year or so. They've been running like wildfire. And AMAT is in a range right now. Got this range. This is a monthly chart. It's in this range right here. Don't know what's going to happen. I have no idea what could happen. But I don't like this range. I don't like this trading range right here. I don't like it. I like to see it break out of it. If you look at the weekly chart, we're resting on 20-day moving average line. So we're hovering around this area. It could make a bounce back up towards 60. However, a couple of things I want to keep in mind when I'm watching this. I always look at the TTM squeeze and see how these blue bars are these dark blue bars are steady marching downward, which is a sign that momentum is dying out. Look at this momentum indicator here. Momentum is dying out. Finally dropped below zero on this momentum indicator. Look at the MACD area. This is the weekly chart now. Look at the MACD area. You got a bearish crossover signal here on the MACD. Blue over the yellow. That's the bearish crossover signal. And I don't see the gap closing between the two, which would make me believe that the blue is ready to cross back over the yellow one. So this is one that I'll be, be very, very careful about pulling the trigger until you want to see some bullish movement. I want to see this consolidation broken. I got a red candle here, green candle here, a red candle here, a red candle here, a green candle here, a red one here. I want to see a couple greens pop up. This is on a weekly. So I really don't trust this momentum that I see in AMAT. Not just yet. Just don't trust it. If you look at the daily chart, same thing. I mean, you can actually draw a trend line and see that something's going on. It made it up here to $60. But can it get back above this trend line? That concerns me right there. That concerns me big time. I want to see some better momentum. I'm sorry. What happened to my chart just blanked out on me because Thinkorswim said I need to increase the space size. So just give me a second. Let me log back in here. Like it could bounce. Yeah, you said like it could bounce. Is that what you're asking? Yeah, it could. That's why you need to watch it carefully because it could bounce. However, the range that it's in now, you're taking a bigger risk jumping in it. Put it to you that way. It could be, it could be worth the risk if it breaks out of that. It breaks out of this channel. This channel just don't look healthy. We're resting up. It's bouncing off of this 100 day for right now, but it's still in a downward trend, right? It's in a downward channel right now. It's in a downward channel. It needs to break above this downward channel. And I want to see this momentum continue to go higher. So unless we break above this downward channel, I mean, this is not somewhere that I would feel comfortable buying a long position with. Now, some day traders may be able to jump in here and trade it for a day or so and get a couple bucks out of it. But it's a risky trade right now because it's not in any type of trend. It's not in a good uptrend. It's not in any type of good uptrend. If anything, it's stuck in a range. Until you can get back above this range, you can see the moving averages start to form back, going upward. Like you see the moving averages here. See how the 9 is on top, the 20 is below that one, the 50 is below that one, the 100 is below that one. They got space between them. They're going higher. That's a trend. This is indecision right now. A lot of indecision going on right here. All right. And then SPY, since it broke. So you want to see the SPY right now too as well? Yep, no problem. I'll show that one, and we'll wrap it up here in a second. So let's take a look at the SPY. Let's do SPX. XPX. What can I say? This. Every time we say we think the SPY is going to, the SPX, the S&P is going to fall, it just continues to march higher and higher and higher. It looks like it's ready. It's trying to reach this 2,800. Almost at that level now. It wants to reach this 2,800. It is knocking on the door of 2,800. This momentum is strong. It's strong to the upside. Look at this momentum indicators. It's strong to the upside on S&P. This is on a daily chart. Look at the hourly. Hourly, like it had its moment that it fizzled out a bit, but you got a big blue bar today. It's like it's bouncing off of this. The momentum indicator is bouncing off of the zero line on the hourly, like it wants to go higher. And if you look at the weekly chart, S&P, this thing is it wants to go higher. I don't know what's going to bring this market down, but it wants to go higher. That's the only thing that scares me about this market continuing, just constantly wants to go higher without any major pullbacks. If this thing continues to show this type of euphoria over the next couple of months or so, anything can happen. The more you march on without any type of without a 5% correction or so, that can be kind of mind-boggling. Oh, I drew this the same way I drew the last fib. What I did was I pretty much just looked at it. I wanted to find. I'll erase it. Do this fib again. Same way I drew the last one. And this is the weekly chart. So we just draw it here. I'm looking at a low point. I'm looking at a high point. You can get a low point and a high point anywhere. So if you're looking for a low and a high point here, oh, sorry about that. I got a low here, got a nice low here. So you can just go from a low point to a high point before a reversal. Come back down to your low point. There you go. Fib is, oh my God, I messed it up. Messed it up. Back down to, there you go. Fib is drawn. It went from a low point up to a high point where I saw resistance and I saw a pullback, and I drew my Fibonacci. Got it? Low point to the high point, back to my low point. And that's on the Fibonacci extension tool. My low point to my high point, back to my low point. That's on Fibonacci extension tool. All right. Okay. Anybody else want to see another stock before I close out for the day? Going once, going twice. Okay. On the SPY, you said, would I do a vertical on SPY? I mean, that's not something that I would do because it doesn't interest me. I mean, that's not my, it's not something that I'm interested in. But yeah, you could do a vertical on the SPY. Let me show you what the spreads look like. Maybe not the SPX, now that you have big money, but you can do it on the SPY, SPY, which is the ETF for the S&P. And just you can see what it looks like. And you can always do a vertical spread on an ETF. I mean, here's some spreads right here. So right now, if you was doing on a SPY, it's totally where you want it. I mean, where you wanted to enter it at. And right now it shows that the in the money and out the money right here would be 276 and 277. And you can always adjust your spreads as you see fit. And this is just one for March. I'm just doing something just random right now. But it's not something that I haven't traded the SPY in a while, so it's not something that I'm looking at right now. But yeah, you can do a vertical on SPY if you vertical spread, vertical call if you think it's going higher. It's totally up to you. Yep, but now your spreads, your spreads is up to you. You can always change the spreads if you want to, if you like to extend your spreads. You can extend your spreads. Extending your spreads can give you a little bit more money, but it gives you a further out break-even point as well. So looking at this particular spread that I just picked randomly, 276 and a 277, it shows your max loss at 122, shows your max profit at 78 bucks just for two contracts. Now, what happens if we change the spreads? Let's take a look at that. So if you want to change this and make it a $2 wide spread, I'm sorry, make it a $2 wide spread at 278. And as you can see, your max profit will go up, but also your break-even spot would change. So yes, you can do a vertical spread on the SPY. Yep, no problem. All right. Hopefully you guys who did follow some of my trades, you saw some of the trades that I were in, you saw some of the reasons why we're in those trades, and the reason why I got out of some of the trades that I'm in and some of the ones that I'm looking at. One last thing I want to leave you guys with, you guys know I've been following this one for a while, which is copper and gold. And I'm going to show you guys something interesting with copper and gold that I think these two may be also Trade of the year. I would say trade of the year for copper and gold. All right, let me show you. This is FCX, which is FCX, which is related to gold. I think FCX goes much higher, but that's not what I want to look at right now. I want to look at the actual ETF. I'm sorry, actual futures contracts for gold and copper. And I want to show you what the long-term outlook for copper is and for gold. It's in pullback mode right now, but I drew something very interesting that looks good. And once it breaks out of this little triangle pattern, I see copper skyrocketing or going much higher. Made it up to this range up here around $3.32. Didn't quite make it to $3.35, which is where I was hoping it would go at before I sold my FCX. Pullback. Now we're in this pullback mode. It's not like it's a straight down. Just in a gradual pullback mode. Momentum is dying out, as you can see here. Approaching going below zero. But it's resting above the 20-day moving average line. If it breaks below this triangle pattern, then the next level would be down to the 50-day moving average line. Once copper continues off of these moving average lines and continue to go higher, once it starts moving up, a break above this 38.2% Fibonacci retracement line can mean big business for copper. Now look at the I want to show you guys the monthly charts for copper and for gold. This is where I say that this year could be a good year for copper and gold. This is the monthly chart for copper. Made it up to $4.64. That was back in 2011. Pulled back, tested that area again. Later, I'm sorry, 2010, it was here. 2011, it pulled back and made it back to that area again, and that's when it failed. Failed, retraced all the way back down to the 78.6% retracement line, found a nice support area, and started to march higher. Now, if we can break past this 335, this next level that you'll see copper go to will be 384. I can see copper actually probably making it back to at least 384 before this year is out. Maybe even all the way back up here to 464. Because of the push that our government has for infrastructure, it should do well for copper. So keep an eye on copper. And also, let's take a look at gold now. Take a look at gold. So I can. This is another metal I'm watching. This is the reason I'm watching gold. And gold looks very interesting. Since 2011, gold made it up to 1923. And since then, it's been trying to really get into an upward trend, trying to break out. It has struggles breaking out, but I think it's really nearing its end to break out. You see this long-term trend line I had from 1923 all the way down to where we're at now. We are now touching the top of that trend line. The second time we've touched it over the past year or so. Touched it here, failed, pulled back. Now we're touching it again. All right. Now let me break it down and to a weekly chart so you can see it a little better. And my thought process: if gold breaks above this long-term downward trend line, once it breaks above that, you guys, we could see a gold rally like you've probably never seen before. So keep that in mind. We're right around it now. So I'm looking at the price of gold right now, looking at about 13, it's at 13.23. If we see 13.25, start paying attention. 1325, 1330, really start paying attention to 1330. You may want to be a buyer of this position of anything gold. One of the gold ETFs I like to trade a lot is GLD. But any gold stocks, if you see the price of gold go beyond 1330 an ounce, you might want to start to look at being a buyer in this market, because 1377 will probably be broken eventually. All right, that's the last thing I wanted to show you guys. Hope you guys have a good trading day tomorrow. Hopefully I was able to shed some light on you guys, just a little bit of chart analysis and my portfolio review. Positions that I'm in, if I close out any positions, you will definitely know if you're following me on our chat group. I always post my trades there. Anytime I exit a position, I try to post it there. Anytime I enter a new position, I try to post it there as well. All right. If you guys have no further questions, no further comments, I will be closing out here. Let's see. Sorry, sir, I can't see. Oh, the gold level right here, 1324, 1323 is where we at now. 1323 is where we at now. But this long-term purple trend line that I have here, if we break that trend line, which is around 1325, we break that, we can see gold start to go a lot higher in 2018. All right, did you understand that? Okay, all right, that's it. Hopefully you guys saw something that you can use, saw something that you can learn from. Hopefully you guys maybe even saw a position that you may be able to get into. All right, till next time, I'll talk to you guys later on the other side. See you guys on the chat group tomorrow. I'll probably be in and out tomorrow because I have a doctor's appointment and then I got to work tomorrow afternoon. But I will be in and out tomorrow and monitor my trades. Anything changes in any of my trades, I will definitely let you know on our chat feed. All right. Have an awesome day, everybody.